Niall, welcome to the People Property Place podcast.
Thanks very much for having me.
Not at all. It's a real treat, and I'm really excited about this conversation. So look, rewind the clock and tell me, did you choose real estate or did real estate choose you?
I chose real estate eventually. My formative years were pretty indecisive, and I went on a bit of a roller coaster really through finishing A-levels and going to university and sort of living in this blissful ignorance that I'll get a degree and then I can walk into any career I want without really knowing what I was going to do. And when you graduate in 2009, even with a good degree and a straight A sort of academic record, it was meaningless back then.
Because you did politics, if I'm not mistaken.
That's right. So I did politics at Nottingham, and it was just something I was interested in. That was an arts degree that should have been a springboard to a myriad of careers, but wasn't. And when I graduated into that job market, I did what any self-respecting person would do, a graduate, and tempt for Camden Council, and then ran away travelling for 6 months.
Just hoping you'll get better.
So yeah, just come back and everything would have sold itself, and it hadn't. And I think my parents, they'd sort of helped fund some of the travelling and said, payback time, you need to focus on what you want to do. And my dad, who's in construction, really didn't want me to go down the construction route initially.
Because?
It's tougher at that end. If you're a subcontractor, you're from the client down, you're so many levels down the payment chain, and it's the sharper end of the stick, basically. And for me, he thought you should go general practice route, and, thought I had a bit of the gift of the gab and maybe saw something in me like an agent or something more business development focused that still had a technical basis to leverage some of my intelligence. But yeah, he recommended I go and do a real estate degree.
So you kind of got there in the end, and you landed at London South Bank where you did your masters, which kind of tied you over, right?
Yeah, exactly. Another year away from work. No, I did. So I did that full time. The option was to go part time, and I'd say the job market had started to pick up. And I made some good contacts on the course. Some people I still talk to today. Sit opposite the table sometimes. Very recently as well. It was still tough out there, and I applied to maybe 30 grad schemes, but I think it was still in that. On the cusp of maybe opening up, but it was still who you knew a little bit in terms of a Savills grad scheme or one of those. You can edit that out if you want.
No, I think that's the reality.
Was,
right?
yeah.
I think I wasn't around at that time, but in terms of the industry, but I think a lot of those big agencies that were kind of the graduate employers had kind of reduced their kind of intake, and it was super competitive. You did a couple of internships, EA Shaw and Savills, if I'm not mistaken, and then you landed at Monsoon Accessorize.
Yeah, so everyone finds this really funny, especially my real estate friends who I've made over the years, and the position I'm in now, and the people, the circles I hang in, and investors I speak to or debt providers, and when I tell them this, they're bewildered.
Yeah, because when I was prepping for this, interview, I was like, how? He started as a property manager at Monsoon, and he's now like leading the UK business of this Malaysian conglomerate powerhouse that's got a scheme in the city of a GDV of over $1 billion. And it's like, how? This doesn't quite make sense. And what I'm really excited about is unpacking some of those moves so we can understand and make it make sense. But yeah, tell me, Monsoon Accessorize Regional Property Manager.
Okay, so I applied for quite a few grad schemes, for property agencies and even small ones, tried to leverage some family contacts to no avail. And this came up, and it was actually a better starting salary than a lot of the agencies. I think it was like 26.5K a year back then, which when you haven't really had a proper job, apart from, the historic working for the family business and doing a bit of summer work, that kind of thing, it was it was worth going to the interview. And then retail at the time was also the asset class. It was when your exit caps are it's sort of in the London are 3%, and no one ever saw internet shopping coming, funnily, even though it was 2011. It was the favoured asset class. There was a bit of glamour to it, I'd say, and I guess the fact that it was 450 people employed in the office and only 25 of them were blokes might have helped. No, I'm only joking.
and you get a 25% discount code on the clothes.
It was actually 50%, and that's probably what swung it. It was my mum telling me you have to take the job. They offered me this role, and it was quite a broad spectrum. It was actually some agency finding new stores, liaising when they open new shopping centres and finding our pitch and that kind of thing, and then a lot of landlord and tenant work, a bit of property management, and some of the rolling refurb stuff I was exposed to, and they had like a really nice team. My line manager was a guy called Andy Clark, who's just an exceptional teacher, and he basically promised me my APC while I was there as well. So I went client side with Monsoon Accessorize.
And it wasn't so. A kind of regional property manager probably just does you a misservice in terms of kind of job role.
Yeah,
you know?
so
it's kind of much broader than that. Some transactions, some asset management work, some leasing work. So it was kind of a proper kind of grounding with an occupational cap on rather than a principal hat in terms of managing assets. Or were you involved with kind of managing and driving value from a freehold perspective as well?
Yeah, so this is actually unique, is that after about a year of being there, I was there for nearly 3 years, the property director changed, and what had been previously the preserve of the existing property manager, which was looking after our group owners' personal family office assets, moved to her, and she sort of chose me as an assistant to help her asset manage these, a broad array of assets in West London, which, where some of them were quite sizable. I'm not sure, but I can name some. There's the Monsoon headquarters was owned by him. Talk next door. Farrow and Ball were based out of the third office on this sort of Nottingdale Village estate, and then he had property through Notting Hill as well, which was like the Electric Cinema, and we kind of managed some in a very similar way to the 75 stores I managed. It was asset management in terms of leasing, having to do capital investment into the properties, and when floors came up, sort of trying to find tenants and working with agents to get the rental profile up and get good covenants. So it was a unique part of the job that probably the other people in my team wouldn't have got to experience, but somehow I got chosen for that, and it gave me a much broader property perspective across multiple asset classes that I wouldn't really have had.
Yeah, and you had the occupational exposure, but also the landlord piece as well.
Yeah, exactly.
And the variety and the breadth, and you kind of touched on, you kind of also got qualified at that time as well.
That's it.
After 3 and a bit years, you moved to Sherry Green Homes as a development manager.
So I didn't come on here to tell anecdotes, but this is another. I don't know whether it's reflective of my character but I don't find myself positioned into situations and then it sort of changes my life sometimes. And this was one of them. My friend was covering the Women's European Tour Golf in Turkey and had a +1. So took me out, and it was in a 5-star resort that was soft launching. And there was only 60 people in this 2,000 person resort that they were sort of trying out various parts of it. And we were in the bar on the first night and met a golf society from Essex, and they offered me a job. They were 2 of the family members who owned a £200 million turnover construction business called Mullally, based out of South Woodford. And the arm of the business they offered me a role in was called Sherry Green Homes. So it was actually like a sleeping giant in terms of ownership for a small developer. They had 2,000 units. They were in joint ventures with some of the nation's biggest housing associations, and one of their sites had 1,100 homes on it, a gigantic master plan in Barnet. They had sites in Deptford, New Cross, Crisp Street in the Docklands, Golders Green. The first asset I cut my teeth on with them was a little asset on Mare Street, which was only about 26 flats, but sold out pretty quickly. It's got some very regrettable balcony cladding, which was gold when we put it in, and it's a sort of tarnished gold now. It's my own personal carbuncle, that one.
So let me hear this one. Your friend was covering the European Women's Golf Tour, had a +1.
Yeah, he's a Guardian sports journalist. He's an editor now. Yeah.
And so he said, do you fancy coming to Turkey?
He'd actually got dumped by his girlfriend and needed a replacement. So it was kind of a quick turnaround for me to get the annual leave signed off at Monsoon, and I bet they regret letting me go on that holiday now.
Yeah, so you went out there and then you met in the kind of VIP area or what have you, family office who effectively offered you a job.
Yeah.
And then you went in as a development manager.
That's
and
right.
what they liked about you was your broad breadth of experience at that particular time, but also, as you touched on earlier in the conversation, you're kind of grown up with kind of construction,
yes,
in terms of your blood, in terms of your dad's having his own business. So you had an appreciation and understanding of how it worked?
I worked for my dad's company every summer from after my GCSEs all the way through university. Unfortunately, when I turned 18, it was like I was probably surplus hands in the office, just photocopying and stuff. So got put out on building sites. Mostly, obviously, what we did was quite complex structural alterations as a business, but there was always an element of light demo or strip out, which was in tight spaces, which was sort of more hands-on work. And rather than needing tickets or machinery licenses for various things. So yeah, I guess, when you speak to some old school Irish heritage contractors and you're able to talk about that bit of your experience, but also being a chartered surveyor and doing asset management, etc., I think probably kind of were willing to take a chance on what I didn't know in development, thinking, oh, he'll be a quick learner, and he's got that kind of work ethic that we want within the team. When I got there, there was 3 young lads about my age, and then everybody else was like 1 foot in retirement. It was great in a way because the old guard would kind of just expect us to do more, and they were like real sort of 9-to-5ers, and what they wanted from us was just to sort of carry the can a lot on some of our projects, and to be probably because of our younger age and different outlook in life, the softer touch with our JV partners and managing consultant teams, that kind of thing. So and working alongside the council quite a lot. So yeah, back then we were oversupplying affordable homes through our joint ventures with HAs, and there was a lot of stakeholder management pieces, which I probably learned quite a lot from during the period I was there, definitely.
Lendlease came knocking.
Yeah.
Very different business.
Yeah, I know. You have to take it seriously when someone like that, with my weird start in real estate, when you go from regional property manager at Monsoon to Lendlease coming and wanting to speak to you directly and say, we need people like you in the team. It was an offer I couldn't refuse. Initially I was posted on IQL, which became, it's their Stratford site. That was called IQL when I was there, International Quarter London. And what they were doing there in partnership with LCR was phenomenal.
Yeah, but these are like multi-billion, 10, 20, 30-year type regen schemes.
Yeah.
You'd come from much more transactional, faster pace.
Yeah, 5-year regen schemes. Yeah.
How could you get your head around that? And what were you, you're kind of parachuted into like own a small project or?
I actually started in a master plan team there was a guy called Stuart Carr who's, I need to check where he's moved to, but he's just had a big move in Australia recently. He was a genius, this guy. But he was responsible for iteration after iteration of what can we do next with the remaining plots inside our, inside the master plan densities and square footages we're allowed. How can we shape and form it to today with a projection for the best financial, best placemaking outcomes, balancing all these interests in what we were doing. And it just meant we did a lot of block diagrams and spoke to a lot of different stakeholders and looked at hotels, residential, and more office, and sort of leasing trajectories, and just all these different combinations that went into the master plan. And I think, again, it's that kind of pan asset experience, understanding enough about how things work and how they're delivered. in order to make a broader master plan site work. And he, you know, that was, we worked on that together for about a year, and then he got moved on, and the residential team needed DMs, because in that space of time, in the year that I'd been there, we'd acquired a number of like regen schemes that was Tottenham High Road West was the big one that I was sort of moved to, and they'd also acquired Silvertown, had made big progressions with Euston, and I think the residential team needed like resi DMs to deliver plots, and that's where I was partnered up with a guy called Joe Devereaux, who's now with us at Gamuda.
You were there for a couple of years before joining the family business kind of formally, right?
Yeah.
Why did you do that, and what was the kind of the role and remit? And was that always part of the plan in terms of kind of taking charge of the family business and taking it forward?
So I'd asked my dad, I think it was when I was at Monsoon, and things were going pretty well for the business then. A good work coming out their ears, and a good solid team, performing. 70% of the labour they had was in-house, direct for us. So, you know, to get to that point, there have to be really good, skilled people that can deliver on site. And I asked him then, and he just sort of said, you know, keep focusing on what you're doing. And then I think I took him out for his birthday whilst I was at Lend-Lease, and he sort of said, would you consider it? And I was like, do you not remember that conversation we had where I asked you and you said no? And I said, yeah, I'd definitely consider it. And
for a price?
Yeah.
If you can afford me.
Yeah. I think that was always a challenge. We looked at it together and came up with an exit plan, but I'd still put my heart and soul into what I was doing at Lend-Lease, but I did kind of know for a while that I was going to be moving on, and it was just about timing that. And I guess when I had a vision for what I wanted to happen there, and it just didn't materialize.
Because?
I guess you can blame like a number of things, like the macro situation, or what, you know, where we'd been quite an original service offering, like what we call it is multi-trades structural alterations. So that is, if you move a lift shaft in a building, or need underpinning, or structural steel internally and structural carpentry that builds up your floors, demolition, all these pieces on a structural engineer's drawings, we were able to offer as a single service. And in the mid-90s, when Mark, my father's first started doing that, it was a unique concept, and it stopped all this trade overlap. It's packaged into one reporting line with subcontractors, one payment to make at the end of the month, and everything's with them. So there's the risk and the responsibility sits in a bigger pot. But the uniqueness of that, by the time I joined, was gone. So, and there were firms who were doing it cheaper. I wouldn't say better, but maybe more wily in how they got the work, and they kind of, our client base started to erode a bit, and yeah, it was a challenge. It was a challenge, and then from the macro perspective, there were bigger challenges as well, which was sort of Brexit. You know, it had a massive impact on our workforce. You know, we'd grown up with a very European workforce, and that was impinged by Brexit. And I think, you know, as we moved to the pandemic, which wasn't that long after I joined, that was when it really started, you know, people putting the brakes on projects, or sustained pauses, or definitely not new projects starting.
So a combination of all of that and fee margin getting squeezed and squeezed and squeezed.
Exactly, yeah. So the profitability when we started was, you know, exceptional, and at the end it was very difficult to make a job stack up, and give it the best quality and do it in the time that we'd say we'd do it. So that was, yeah, it got more and more challenging, and you know, we did a lot to try and recover the business. There was like one Christmas where thought it was gone, and then I think they'd like released lockdown, and we picked up a couple of bits and managed to agree terms that were better than the standard, 45 days from you paying all your staff and paying all your suppliers to, actual sort of regular payment work. And that probably rescued us for another year. But then eventually we had to turn the lights off, which was soul destroying.
Yeah, I can imagine. How was that conversation with your dad?
Tough. He sort of likened it to losing his fifth child. So there's four of us, and he said it was like, Construction Solutions were around longer than my little sister. So, well, not anymore. But yeah, it was really tough. And personally, I'd kind of given up what was a good career and a good pathway with great people as well, and kind of was at a crossroads again, not really sure what I was going to do in my life and how easy it was to get back in, because I definitely didn't want to work in construction again, and I really wanted to get back in development. But when you take 4 years off your CV of this kind of black hole, or it's not a black hole, because I learned a tremendous amount, like running a small business. There was 70 people in our employ, and it was life or death sometimes for the business, which carrying that around is it does give you a sense of perspective and probably make you better at decision making, definitely.
So what was the kind of the thought process? What was the plan? How do you get yourself out of that, and how do you kind of get yourself back in that development track? And what did you do?
So I fluked a bit of consultancy work through someone I knew through a friend, and they said, we know someone that needs some help with unlocking some issues on their development, and finding the right contractor, finding the right method of procurement that wasn't in their wheelhouse, but I was able to help them manage. And they, little bits of work came up like that, and it was paying pretty well, just odds and sods with a contractor client hat on, and just unlocking little issues that if you're not a development professional, you probably wouldn't. It's tougher to understand. And while I was doing that, it was less than a year, it was paying okay, but I was very keen on using that as a bridge to get into like a full-time PAYE job again and feel that safety net that I hadn't felt for a while. And I'd made my friends, who were very well connected, aware of what I wanted. But the problem was I was like on quite good money from this consultancy stuff, so I wasn't going to like take a big step down. And where there were jobs advertised, it was like DM at Cortland or something like that, or like there were roles around, and like quite that were being advertised, and people were hungry for someone probably with sort of my skill set, but I kind of didn't want to step down. My friend Cameron, he runs a company called Mayfair Private Office. He's an agent, but just really well connected, especially on sort of more resi side. He played golf in Dubai with the Gamuda chief commercial officer, and the Gamuda chief commercial officer just casually said, "Oh, you guys are well connected in the UK. We're looking for someone to be our first person out there that's like looking after our projects on the ground, stakeholder management. We've got JVs that we want to keep a closer eye on." And there's problems that have come up that we want to unlock with someone who knows what they're doing. And my friend said, well, they also said the criteria were, he's got to have worked in property and planning. He's got to have worked in construction, which no one ever asked for. And he's got to have a good contact book. And my mate put me in touch, and it took 6 months to go through the process. But it's where I am now.
Who are Gamuda for people listening to this? Because, it's not small fry. No. It's a massive Malaysian multi-industry conglomerate.
Yeah. So Gamuda started 50 years ago, and it was sort of regionally building roads, small bridges, kind of small infrastructure. And since then, we've grown to be, over 50 years, grown to be a company that operates out of 9 countries on the infrastructure side, and does intensely complex engineering solutions, so tunneling, building hydroelectric dams, reclaiming land out of the sea, building airports, Doha Airport, for example. We're working on the Sydney metro system in collaboration with Lang O'Rourke. And yeah, that business spawned balance sheet capital, which was then put into property as well. So the property business is 35 years old. And that started off with major township developments, they're called, which we would call master plans. But, these could be up to 20,000 homes on a single site.
Wow. With
the associated land plots for hospitals, schools, private clinics. We've got a theme park on one, nature reserve. And those I think during the sort of real tiger era of the Malaysian economy, they couldn't build the houses fast enough to sell them. And it was sort of high, big scale, but also high return as well. I think that's cooled. And what they've looked to do outside of our two main markets of Malaysia and Vietnam is to deploy balance sheet capital further afield, Australia, close by Singapore, and in the UK. And those are more shorter timeline, high IRR, high return developments that kind of it's a riskier pot, but it's
diversification play.
Exactly, yeah, both nationally or internationally, but also into asset classes that there's not as much access to or need for in the local economies.
So tell me about Gamuda's kind of AUM and size and scale.
So Gamuda typically would measure this as GDV in terms of, because the development business is set up to buy assets or land, develop, and then trade it. And that's everything we do is predicated that way. There is some operational stuff in the placemaking piece, but generally, the high value assets are sold either individually to homeowners, for example, or as a income producing asset to core income. And we've done 18 billion pounds GDV.
Wow.
Through the property business. We have a 1.5 billion pound pipeline in the UK. And so our group revenues annually at the moment are about 3 billion pounds.
Wow, some size and some scale.
Yeah.
And so in terms of the UK then, talk to me about, how Gamuda came over to the UK, what the business plan was and what the idea was as well.
Yeah, so this is during my interview stage, they were quite stringent about, this is our investment focus. And it was almost like a rule book called the QTP strategy, quick turnaround project strategy. And it was meant to underpin decisions in Australia and UK, and to an extent Singapore as well. Now, this was based on ticket size, so like 10 to 30 million equity, 5-year investment turnarounds, 20% IRRs net of tax and promote, and then JV partnerships, minimum 10% equity from the partner. And we started off focused on that strategy. We bought a site in Aldgate, bought a site in West Hampstead, both roughly like 70 to 80 million pound GDV sites. And then the rule book suddenly flew out the window. And
is that you were doing?
I was asked my thoughts, but I joined about a month after we first started really getting our teeth stuck into the feasibility and underwriting of London Wall.
So we'll come on to that in a minute, because that is an absolute monster.
Yeah.
So it was initially, you're a developer by DNA in terms of the business. But in terms of accessing new markets, you came in almost as an LP, and you looked to partner with local developers who would need to have meaningful stakes, aka 10% of the equity at least co-invested.
Yeah.
You'd be the equity ticket, and then you'd obviously raise financing as well for the scheme. So to kind of test the market, you would take an LP position?
That's right. I think you've hit the nail on the head there. It's an active LP position. Not
a passive.
No, like I think when people sort of started to align themselves to us or pitch ideas to us, they were picturing this kind of monthly report, or just use the bank monitor's report and give it to the co-investor. And we wanted to be in the design meetings about external wall system thicknesses and how much insulation goes in there, meet the building control guy, and the level of detail that we like to get in is, and it's beyond what a typical LP would do. And that's because at the end of the day, we're a developer. We're a developer.
And so that's a way of being able to access the UK market meaningfully, but partner up with local talent that knows their way around, the UK site schemes and can kind of be an expert guide, but almost give Gamuda the training and the understanding and kind of the lessons learned on how things operate. I
think that's very fair. We did use it as an educational springboard to progressing what we were doing over here, to growing a team, and to not have to do the minutiae. And you do need presence. If you're going through a planning application, you need presence on the ground, and you do need the local know-how of people that know what they're doing. And we partnered on the basis that, I think this has always been a thing for me, is partnering with someone when you're foreign capital coming in is sometimes asset-led. And very rarely driven by, we just really like those guys, let's wait till they find something good. It's really? Always, I think it's different from maybe we look at it with a developer's lens on a site-by-site basis, whereas I think if you're a more silent investor, you look at a business and you think, I love what they do, and you piggyback the business, whereas we were always driven by
the site and the quality of the scheme.
The site first, then do we like the partner, and then is this, should we be investing equity into it?
And is that because ultimately you're the majority of the equity, so you'd have the majority of the control, and it means that if you did need to, RFP and move the partner on, you could do, but you actually but you could, right? Yeah, but you wanted the scheme first, rather than just backing the partner. And obviously, if you can get both, great.
Yeah,
but that was kind of more of the mindset.
Yeah, I think. Don't get me wrong; it's just a hierarchy. You still need the partner piece to be right, and you need to gel with them, and I think it's very important. But for us, it was always asset fundamentals first, then the partner, and then then making proportional weightage to that to make a decision.
So what was the criteria in your QTP playbook? 10 to 30 million equity checks.
Yeah.
And then what was kind of the partner kind of criteria as well?
Okay. Tough questions. So I think when we first started, it was a resi focus, because we built 57,000 homes as a business, and resi's at the very heart of Gamuda Land as a business. It's kind of, it underpins most of what we've ever done, and I think the focus was on residential assets. It has to be really well transport connected. That's why our first two sites were in West Hampstead and Aldgate, and different models. But I think West Hampstead, exceptional build to sell location. You get downsizers from Hampstead, and it's good starter homes for wealthy people. And then on Aldgate side, it's a transient community on the fringe of the city, and a sort of BTR or co-living concept there would work very well, because it's walking distance to lots of jobs, and people, whether they're international or just are earning enough to work a good job in the city but renting, don't want to be traveling too far, and it's close to Shoreditch, etc. That was kind of, I think those kind of ingredients were key to choosing residential investments. On a partner basis, it's there's a fair bit of EQ that goes into how we look at the partnerships, and a lot of it is about getting along with people, And I also find that during the pre-acquisition phase, the get to know you bit, a lot of that is what they said at the start, still what they say when we sign a contract. And where we've come unstuck previously on deals that haven't actually ended up closing is that through that passage of time, whether that's 3 or 6 months, what we heard at the start isn't what we're hearing just before we get into contract, and that doesn't work for us.
Is that a Malaysian cultural lesson or lens or view that you've had to adopt, or what's been driving that?
I think it's a anybody who's worked in a JV thing. So it's not. If you can't trust what someone says before you buy the building, how are you going to do the next 4 years with them?
Yeah, fair enough. But I didn't know if it was kind of like a Malaysian cultural thing that overlapped some of that as well, or if it was just part of the Gamuda DNA. I'd
say it's more pronounced with those guys. That's an attitude they have in terms of looking at joint ventures, and that trust element is probably more pronounced than where I'd been before. I don't think it's specifically Malaysian. I think from a Malaysian perspective, they're just very keen that people don't lie if they don't know something, they don't lie about it, and they sometimes might ask you a question twice just to make sure that you still have the same answer both times. But they're also they very much like people who are well connected as well, people that let's say understand planning, but have the relationships with planners or with ward councillors, those kind of things. They're important in terms of being able to progress applications in tricky environments, which any central London one is. And then, I think those are key factors when it comes to looking at partners.
So Gamuda have been in the UK for 5 years. You've been in the business for 3. Just over 3 years. You touched on those kind of 2 resi-led schemes. Let's come on to 75 London Wall, or the kind of the former Deutsche Bank HQ for people listening to this.
Yeah.
Might not have come across that scheme before.
So as I said earlier, I joined and we were already into due diligence on 75 London Wall, and that was the work of we have a relationship with someone who's been on the show before.
Yeah.
John Lurie.
At Realty.
Yeah, at Realty Corporation, and Victor Valagora. These guys were kind of instrumental in finding our initial deals, and also for tying up the relationship between us and Castle Forge on 75 London Wall. You might know that on that site there was, I think, 20 bidders on that site before the mini budget. I think that dropped by a big number. I'm not sure how many there were in the final run, but John put us in touch with Michael
Kovacs, who's also been on the podcast.
Yes, Michael Kovacs at Castle Forge, and 3 years later, the rest is history. We've been working together on that project. We both made the brave decision post the mini budget to stand by our convictions, and to go ahead and buy the site. And it was obviously a sea change from the QTP strategy. It broke one of the big rules.
10 to 30 million quid equity check. Yeah, that's gone out of the window. I think if my research is right, you bought it for 256 million or so.
257, yeah.
257.
Yeah.
Just off.
Yeah.
Talk to me about Gamuda's position in that. Are you the equity in it and Castle Forge are the development manager, or are you the development manager, but also there's a 500 million quid development loan from Cheney in there?
Yeah.
Which is a massive ticket.
Yeah. But
it's a GDV of over $1 billion.
Yes. So depending on where cap rates end up, but relatively conservative assumptions, we're it's over $1 billion. It will sell for over $1 billion. The way that the actual JVA and the joint venture agreement and the development management agreement is structured is that Castle Forge have a scope of services to deliver for us as on the asset management, the development side. But true to form, with that much money out the door, we're sitting in on every meeting, and we're side by side with them, and they don't point back at the agreement. They're incredible. They accommodate us. They help us learn, but also listen to us when we have value add. which is really important. And when you're these complex projects and complex engineering, it's kind of, that's partially our bag. And obviously as a contractor in our own right globally on big projects, they understand our position in the procurement process and why we find it really important to be ingrained in that. So that we work really well with those guys. I wasn't going to name any specific names from our JVs who I love working with, but they're up there.
So talk to me about like the scheme itself, because you guys, 10-30 million quid equity checks, Resi focus. This is like, as you touched on, the QTP well out the door very quickly. This is a massive scheme, and it's office focused.
Yeah, that's right. So we've got it's about net lettable office area. It's just over 450,000 square feet. So we've taken a building which was a 9-floor wedding cake structure that steps right in, and taken it back to the 5th floor slab, and then we're rebuilding up to floor 13, and it's extruded. Each floor plate is extruded further and further to the original big base floor plate.
So it's kind of come in and then out again.
Oh, sorry. So it just comes in on a much more minor scale than before, which gets us that floor plate increase and creates terracing on the upper floors. The floors 1, 2, and 3 are trading floors. Sorry, that's 2, 3, 4 are trading floors, and they have 6-meter clear slab to slabs, which is just incredible. It's like being in a cathedral. Because it's a post-tension slab, there's very limited columns. The building's long and narrow, so the cores sit in the middle, and then it steps out with very limited columns. So on one of the lower floors, you can see from one end of the building to the other, and it's 110 meters. Wow. Which for the modern method of working, which is creating collaborative environments, different departments, people accidentally bumping into each other and like spawning ideas, that's the dream. So we've been talking to a number of multinational organizations, typically finance driven,
I was going to say, finance, banking, law maybe was kind of ideal occupier. Exactly. Is that kind of shifting to some of these kind of AI corporates?
I saw an announcement the other day that someone's looking, Anthropic, I think.
Yeah, I saw that as well.
If you're out there. No, we...
I could be a small leasing... Yeah. Take a leasing fee for that if it comes...
We did note that, and we're quite substantially through some discussions with parties, and I'm not able to say anything at this stage, but if Anthropic wants some space, they better hurry up.
Yeah, I saw a genius bit of marketing. It was Michael Kovacs and the team at Castle Forge.
World class.
Do you want to tell the story?
Yeah, so I woke up and I had a Bloomberg notification that Larry at BlackRock was bemoaning the lack of office space in the City of London, and Michael immediately responded by getting a banner made saying, "We're right over here, Larry. Give me a call if you want some space," which was incredible. And yeah, it kind of blew up LinkedIn. But yeah, sometimes the old school ways are the best.
Yeah, creative, reactive, guerrilla marketing.
Yeah, exactly.
Garner some attention. I thought that was absolutely brilliant.
Yeah.
So that's going to be PCing in 2027.
End of 2027, it basically a 24-month build program kicks off in January. Erith have been undertaking the enabling works to great success. They've had to build the cores up so that the steelwork contractor can just get on and start building the frame that goes up. And yeah, everything's stacked up, ready to go. We've got the facade contractors under a PCSA, and they're in fabrication for some of the facade. It's all it'll be over before we know it. I've been looking out our office window, which looks directly into the site, and just watching this. Yeah, I just can't believe how far it's come over since we moved in there about 10 months ago.
Give me an overview of the other assets and the other kind of projects you've been looking at in the UK.
we spawned this PBSA strategy from being asset agnostic, deal by deal basis, and we saw an opportunity in Woolwich, which was brought to me by a friend who's an agent, and that was a JV with a company called QIP, who are a Singapore-based but have developed in Japan, in America, and the UK. They've got quite a good track record of developing or forward funding student housing, only student housing. And we looked at the deal, and I guess what stacked up for us was that we came into the deal and they'd done something which is now extinct as development professionals, and they got a single stage tender off a stage 3 design and got a good contractor at, I can't tell you, X per bed, which is about 20% lower than what you could get today. And that contract was only signed last April. And it made the development work. A big chunk of your cost was A, under control, under a fixed price lump sum, and B, it was the contractor was great, and it was very deliverable. They got stuck in straight away, and immediately just off the concrete frame were about 6 weeks in front of their program, and they're going to finish that building at the end of February next year.
So you're taking the GP stake. You're taking the GP position in terms of that relationship.
We're LP. QIP are the GP, because they've done some DM. They've got DM and AM responsibilities. Again, it's a slow foray into a new asset class, but with that asset, we added a bolt-on phase 2 because really loved the potential success of phase 1. So Hurlington Capital were sort of they were the lead on the land initially, and they'd got the planning consent, and then QIP sort of formed this structure with all three of us to deliver the asset, us being a big chunk of the capital, 87.5% of the equity. But again, lessons learned, great experience. It's in Woolwich, so it's right next to the Crossrail station on the Berkeley Homes master plan. So it's got a great story despite not being core student. And when we presented the deal to our powers that be, our board, one member of the board was saying, why are you showing me one of these? You need to be showing me 5, 6, 7 of these, and you need to get deal flow on PBSA, because he had really high convictions about. He just sent his daughter to university in the UK, in Bath, the most acute demand and supply market. So he was a real proponent of PBSA as a strategy, and said, look in London, but also look regionally, and let's build and diversify. And since then, it's been a very, very active part of our business over here. We bought a site in Glasgow. It's 492 beds that launches next September, so they should PC middle of next year. And then we bought a site in Stratford, which is our first GPLP baby, and it's a Gamuda development site, which is a big change for us, and obviously more responsibility coming in-house to the UK team, supported by HQ. But we're
you're ready.
We're ready. It's been 5 years. We've learnt a lot along the way, and I think this is our step up to the next level. And I think there'll be more like that. As a complex infrastructure provider globally, sort of cookie cutter, brick clad, cleared site, new build isn't really terrifying the powers that be at home.
You've got it right in your wheelhouse.
Exactly.
So it's kind of living PBSA, at the moment, London Wall, which is a big old chunk of your 1.5 billion.
Yeah.
And then is it just trying to kind of invest more in terms of those three kind of main strategies?
There's a couple of other areas of focus that I'm obviously not hanging my hat on anything, but I've been working with our team, with our analysts, and looking at diversification and what does that look like, and what markets should we approach. And the one that's really, ringing for me is probably the most depressed asset class we have at the moment, and that's London C3 residential, and not just BTR, but also looking at build to sell. I think there's going to be a time that, and it's not that far away, that we see the market come back in a big way. The the fact we've only built 5,500 homes in London this year, or will have, it's unsustainable.
And target of
in London, I think 60 more.
Yeah, I thought it'd be more.
It's got to be somewhere between 60 and
100,000. 100,000.
Yeah, probably. Yeah, that can't go on. And it's the demonstrable change that we're seeing on the supply side from government, where like the GLA and housing communities and local government within the civil services, just they are pushing this really hard and we can see that through relaxation of viability, relaxation of the London Housing Design Guide, taking powers away from local planning authorities, and the mandate is to build houses. And I think if we can just get the demand side right, then it's definitely a market I'd want to get back into, because, well, it's obviously been a common theme through my working career, but I just remember the days at Lend-Lease where it was like, if we build it, they'll sell. And even Sherry Green Homes didn't take homes abroad; they sold to local people, and all of their developments flew off the shelves pre-completion, and then a short period afterwards. There's a massive market where people are paying $3,000 a month for a dump, and if you can cure their barrier to entry on the deposits they need, then their mortgage, the gap between their mortgage and their rent is, they'll actually end up paying less if they can get past the deposit hurdle. And I think I expect something to come soon on the demand side.
And that would fit right within the Gamuda wheelhouse playbook DNA.
Yeah.
There's not going to be many who've built over 75,000.
57.
Oh, 57.
Yeah.
Got it the wrong way around.
Yeah.
57, but still 57,000. Built to sell homes.
Yeah, a lot of it's built to sell, and we're the challenge for us is that we have a competition for capital in the group, and our capital needs to be patient, because we put in a lot of money up front on acquisition, on the build, and then you realise your income right at the back end. In Malaysia and Vietnam, they have staged payments from the bank. So if someone buys a home off you early, they have 10 points along the development journey to PC, where they pay you a tenth of the value. Oh, wow. So, yeah,
getting your capital on the way through.
Exactly.
Happy days, whereas here it's all back end.
Here, exactly. So, that's the challenge, is competing with those guys from a residential perspective.
From a cost of capital perspective, to get your schemes to stack up.
Exactly. Like, their IRRs will always excel against ours on, all things being equal, because they're getting income or revenue through the deal. And ours is be patient, wait till the end, and hopefully sell most off plan. So when you do PC, you're completing on a rolling weekly basis. The other area I'm fascinated with, just because of the spread from where it was during COVID on cap rates to where it is today, it's the 200 basis points plus, is the big box industrial world. It's pretty new to me. We're writing a bit of a thesis on it at the moment, trying to meet partners, speaking to a number of people in the space, and trying to work out what's good.
If you need some help on that, I might know a couple.
I think I've listened to a couple. I can't name any names though. I don't want everyone to know that I'm meeting their rivals.
but there's a playbook there, right? Work with the partners, best in class partners, learn from them, and then in time you might move into doing it directly.
This would only be led by working with someone who's done it before, who knows the leasing agents. I mean, the build bit, if you thought student was easy, yeah, it's literally
steel
like,
frame.
Wow. When I saw the development program, I was like, this is something wrong here. We bought the site, we were on site in 3 months, and we built it in 11. And I'm like, yeah, that's just what we do. And I was like, this looks amazing. If you can get someone to lease it without waiting a year at the back end as well,
you're
absolutely flying. So yeah, I think it's something where what we are seeing there is this. There's still this bit like the office space, the bifurcation of everything else versus best in class ESG stock in the right locations. That stuff's in such high tenant demand, so that it's half the vacancy of the rest. So I think the tenant story's there, ability to get it up is there. A lot of it you don't really have to deal with planning consents. You take on an existing consent or RMA an existing consent. It's just understanding your exit pool and liquidity. But I think it's more liquid than student at the moment.
Talk to me about the UK team of Gamuda. Who have you got? How have you built it? And what are the plans around that?
I need to ask this. So I started on my own. And
your first boots on the ground.
Yeah.
So the business had been over here for a couple of years. Then hence the kind of the golf trip meet Niall. We need someone who's got an eclectic skill set to do all of this.
And then
parachute him in.
Exactly. And do you know what? I was absolutely fine on my own managing planning at Aldgate and mid-construction West Hampstead. But then they bought like the biggest refurb in the city. And I was like,
I've got capacity.
Suddenly,
but not that much.
Yeah, suddenly it was a bit overwhelming. And what's happened as we've grown the team is started with a couple of sort of junior people more helping out on the more administrative side, minute taking, attending meetings and doing some of getting consultant fee proposals back, all this stuff, and analysing documents, that kind of thing. And what's evolved is a requirement as we've moved through to 6 JVs from 2 to development professionals. And there's a blend of 2 things. There's age and experience, and half our team are under 30 and half are over. And the half under 30 have come from incredible academic careers. Number 1, Manchester School of Architecture, LSE Actuarial Science, very sort of science-led degrees, which is it's very favoured at an engineering business or an infrastructure business. And they are super quick learners. They understand hard-working culture, and they know the brand because a lot of their families live in Malaysia. So that's another thing we're really to touch on here is we've tried to stay true to our roots culturally. 75% of our team are Malaysian, and I think it's a massive help to us because culturally and business messaging, it translates seamlessly to our team on the ground here. And sometimes you can have an outpost where there's cultural differences that can be bewildering to some people, but we don't really have that. I see myself as an honorary Malaysian after 3 years.
Yeah, I bet.
Yeah, I've adapted some of their no nonsense talking. Yeah, late nights, early mornings. Yeah. So no, I think the team's grown. I would say we have taken 2 ex-Lend-Lease staff. Stick to what you know. My colleague Joe and my colleague Ellie both used to work there for a period. And yeah, I knew Joe, but I didn't know Ellie. But they've got stellar CVs and have worked on incredible projects, know exactly what they're doing in the planning arena and JV stakeholder partnerships. So it's more of a coincidence on that side than anything else.
If you take a bit of a step back, what's your take on the market right now? What are some of the biggest challenges and opportunities?
We're very market facing at the moment in a number of ways. See, we're acquiring, so we speak to sponsors, but we're also sponsor on something ourselves. We've got the asset in Marthgate where we're looking to secure co-investment. It's likely that will come from our part of the world. But what we're seeing is from the raising side is that people are very timid with their capital at the moment. People aren't willing to take they can't risk adjust a view at the moment, so they're not willing to plunge into something with this level of uncertainty. So no one's saying, oh right, this deal will go great guns if we can drop 50 bips off the cap rate. Shall we take that risk? No one's doing that. They'd rather rather chase a high yield on cost by picking up a refurbishment assets. This is specifically in the PBSA sector, or buy it income cheap or distressed. The development sector for me is quite, it's very tight, very hard to raise capital at the moment, which is a challenge. And I think what that all comes down to is you can't, because there's a lack of trading activity or comparable evidence for PBSA best in class or something that you exit after a year of PC, no one can pin a tail on where it's going to be when these exits come forward in 28, 29, whenever. So that's a massive challenge for us is, you know, we can keep control of the cost, we can buy the land right, and roughly you can project rents just from where we've been, and you can project occupancy, you can put a discount in there to propel your occupancy. There's a few things, that's a very manageable part of delivering the asset, but it's just what's someone going to pay and who's that going to be? Yeah, why aren't they buying any at the moment? And we know why that is. It's because that spread's too thin when it's risk adjusted versus 10-year gilts. It's just too thin at the moment. So I guess the other challenge for us is I see this as like a cross asset class development issue, is that when you're at a certain level and a certain tier of contracting, there's no such thing as a single stage tender anymore, particularly in the living sector where you've got high risk buildings. We can't, there's with the high risk buildings with Gateway 2, you can't create competitive tension up to the point of signing a contract or up to the point of getting into bed with someone anymore. You have to get them on board early, do 6 months plus in a PCSA, and then they build up a narrative, and it's, you know, kind of, you're in a position where you're embedded with one partner, and you've got program constraints. So let's say they go 5k a bed on the PBSA higher than where you just agreed it. For that much money, you can't like just turn around and say, oh, we'll just get a new contractor, because that's a 6-month process and you need to get going, get your beds onto site.
Dings your IRR.
Yeah, exactly. And we can't do that. Yeah. And, you know, the holding cost of interest on whatever debt finance you have, it's all just sort of adds up. So you're just kind of, you're a bit in between, and you've got to swallow the pill.
Yeah.
Yeah.
Which delays or just turns everything off from not even happening.
It just chips away at your return, because you probably just end up taking it, which is, I mean, if you were able to single stage tender, that you could, and someone raised their price like that, you'd be like, I'm just going to go to the next guy. But there isn't a next guy in the process. Yeah.
No, if I gave you £500 million worth of capital,
yeah,
who are the people, what property and which place would you look to allocate that capital?
I've thought about this in a sort of slightly different spin. That
love that.
On the people front,
yeah,
I'm going to go 50-50 Gamuda ourselves.
Right, okay.
So 250 mil for Gamuda to develop, originate, do it all ourselves.
Yeah.
And then 250 mil in joint venture partnerships, so that we can keep learning new ropes.
That's your playbook.
Yeah, exactly.
You've just told me your playbook.
Yeah, I know. It's you've heard it all before over the last hour or so, but I still think leveraging JV partnerships for 5 years is still infancy to me, and we need to still keep learning and taking other people's skills and expertise and learning from that. But we can stand on our own 2 feet in the residential and the PBSA sectors, but anything new, or even this like complex London office, I'd still try and leverage the relationship of a really good partner who can put meaningful equity into partnerships. And if you're out there and you've got 25% of the equity stack and you want to bring me some ideas, please do. But that would be office, industrial that we mentioned, industrial and logistics. I definitely keep a small allocation of the 500, maybe 50 mil for a data center that we could get planning for with our partner and then deliver ourselves as Google's partner in Malaysia for data center delivery.
And that's what you are over there.
That's what we are, yeah. So I think we just need to get someone, get us the power, get us the water, and get us the site, and we'll manage the rest.
just the easy stuff.
Yeah, exactly. And then I think on that JV partnerships, I keep 50 million for special situations. And special situations, I see some weird and wonderful stuff, but it's just not...
Like what?
All sorts. I can't, there's one that I literally spoke about it yesterday, but I can't really, I'm bound to secrecy at the moment, but it's kind of just bitty, tricky, but has like very cheap finance and a guaranteed exit. And it's like, because it's bitty and tricky,
it doesn't fit an institutional tick box. It's not clean.
It's not clean.
But there's money to be made in it.
The sort of capital intervention, the sort of contractors you're using, probably the size of what me and my dad's firm was. It's small, it's bitty, but there's like a bigger picture and an aggregation piece, and that kind of thing we just can't do. It's not, we don't have bandwidth, or people wouldn't invest in it from our side because it's like...
Doesn't hit the QTP.
No, it doesn't. Exactly.
The original QTP.
Exactly.
Quick turnaround property or whatever.
Projects. Yeah.
So in terms of the kind of the people aspect, Gamuda, tell me some names, can I press you for some names in terms of who some of those people would be, or brands or businesses?
I think the point in these joint ventures, it was never just to be one-offs. So I think, again, without naming any names, we've worked with some partners that we've loved working with, and obviously you have your differences every now and again, but being 2-3 years into relationships, it's you get to a point where you think, would I go on a second date? And the answer to some of them is absolutely yes. And we've got structures in place that that you're already set up to do new things. And I do really feel like you should grow from what you've done already and start looking at other opportunities. In terms of new future partners, I mean, I can't say it because then it will disrupt my negotiation stance when we do get into bed with them. So I can't say them now that I really admire them, because I've got to probably put my Malaysian hat on and be a bit more standoffish.
Yeah, fine. And in terms of place then, coming into kind of the last...
It's UK only for me. If I'm leading the ship, if I've got £500 million in my back pocket, it's staying where I know what's going on. And that's in certain sectors in the UK, probably a bigger London weighting, because, that's where the highest returns and highest rents, lowest cap rates, the things that work. So if you're buying right on the way in and you've got a good pool of contractors used in the past, that's where your best returns can be.
And that's where your takeout is. Well, no, don't go on the golf course anytime soon. and none of your mates should go on the golf course anytime soon as well, because that's been the catalyst for the last couple of moves. Look, I've absolutely loved this conversation. I really appreciate the energy, the insight, the honesty, the reflections, the ups, the downs. And I think people will listen to this, and there might be some people who are early on in their career who kind of sat in a property management seat going, well, how the hell do I get out of this? And what does that look like? You've proved that with some drive, a bit of gift of the gab, putting yourself in positions, those calls do happen. Yeah. They do come. And
they do.
You kind of learn and iterate and build. And I'm really excited to see what you in the business go on to achieve for 2026 and beyond. So thank you. It's been a real privilege to have you on the show today.
Thank you so much, Matthew. It's been a privilege for me.